In terms of that general market sentiment, not resounding gains today outside of the banks, but it's good momentum in terms of what we saw relative
Apple,
to last year.
Amazon, Microsoft up, that helps too.
Right. And it really goes, it started with Citi coming in with expectations that were so low, and then the banks, for the most part, JP Morgan okay, but the others have been better, First Republic. And I think we were pricing in so much negativity in December that maybe the market was thinking this recession is here. Banks have told you otherwise, and I think at this point, we have to see with this follow-through for next week, what's going to happen in terms of industrials and the other sectors. What are they going to say about the economy, and will that then follow through?
Let's dive in more detail onto the banks. Goldman Sachs and Bank of America higher on strong earnings beats. They're the latest of the big banks that have reported. Morgan Stanley, of course, on deck tomorrow. Mike, we talked about this. They were attractively valued, but if we were sitting here yesterday and we thought we'd get an almost 10% move in Goldman Sachs, 7% in Bank of America, we can't just put that purely down to valuation. There's some good fundamentals there, both lines they beat on.
Valuation just sets the scene, and really forget about what the published estimates were. The expectations embedded in those stock prices were quite low. But I do think that there really wasn't any specific thing to worry about in any of these results, especially with regard to the consumer and credit quality and all the rest of those things that you'd be looking for some kind of an inflection point. And so you have an under-owned sector that the fundamentals are coming around on. They look relatively cheap, and I do think you got that extra boost from people saying, I need to participate.
Sarat, you own Bank of America. Obviously pleased by today's move. Is it profit-taking time after that? Big move.
No, I think Bank of America had been sold off so much. I mean, it hit $24, and it was basically using it as a source of funds. So I think when people saw stability, and to your point, they actually did pretty well across a lot of their businesses, and loan growth was not that bad, credit quality is not that bad. I think people are coming back to say, there's value here, you've got a strong balance sheet, and you've got dividends, why not own these for the longer term?
Well, I think it also helped that you had a higher rate, rates were higher across the yield curve today. The 30-year sort of popped up, and that's quietly been happening and sort of fueling the risk sentiment and also the recovery in the banks.
Yeah, and I think part of that was when rates were going lower, was that forecasting something nobody really knew. Now you're saying rates are going up by themselves, the Fed's really not in the picture. That's a better picture economically, and the banks benefit. Just
going to mention very quickly, Prime Minister Theresa May is going to make a statement in Downing Street in an hour's time. We don't know what that's about, but certainly something that we will keep an eye on. Of course,
didn't she call talks for tonight with some of the members of Parliament?
I don't know why that would warrant a statement in Downing Street. We'll keep an eye on that. The British pound didn't really move off the back of today's vote. It did yesterday. It hasn't moved off the back of this news, but we'll wait to see what that statement's about. Back to the banks. Sarat, Morgan Stanley tomorrow. Clearly, trading has been soft throughout most of the banks, but Goldman Sachs managed, despite that, to outperform. And Morgan Stanley's been pretty cheap as well. Not as cheap as Goldman or Citi coming into this, but it's not expensive.
No, Morgan Stanley is actually trading right around book value as well, so they're pretty cheap. The question, I think, with Morgan Stanley, they've moved away from trading. It's the asset management business. How did this hold up in the last quarter when you had that big downturn? Were they able to accumulate more assets? Were they able to increase their billings? And where is that going to go? Because that is a different franchise, and they have M&A as well. So.
Besides the share price performance, Mike, anything else stand out to you inside the earnings pictures for banks?
Really, it's just a matter of kind of steadiness, and so I think that's what is being appreciated right now. So if you're willing to almost across the board say that December and the fourth quarter in trading was something to forget about, we can look beyond it, then it's just, this is the kind of environment, if you're still in a 2% economy, where these banks can do fine. By the way, the tax cut kind of completely put them over the line in terms of Bank of America has an 11% ROE really because of the tax cut. And that's going to continue on, right? That doesn't go away in terms of that earnings base.
Completely. I mean, the other thing which we'll only really know for sure in about a year or maybe 2 years' time, the digital stats for Bank of America are fantastic. Is that a bit of a sort of advertisement? Is it a bit of a, we'll say that, or does it really deliver to the bottom line? Their cost cutting has been good. Their operating leverage has been good. We'll know in a couple of years whether it's the big banks that are still making lots of money or whether it's the PayPals of this world.
Right.
But the rhetoric is encouraging, and I don't think people are fully paying up for that yet, but we'll see if it continues.
Yeah, I mean, clearly these institutions are hard to displace. The question is that digital push mostly defense, or is it also, as you say, going to improve their returns?
Speaking of the big banks, JP Morgan Chief Jamie Dimon spoke today at the Economic Club of New York. He voiced some concerns about short-termism. Listen.
There's too much focus in the short term. I mean, I look at, what's important to me? market share, number of clients, products and services, new branches, not NIM, and whether expenses are a little higher or lower that quarter. And we can't forecast trading any more than anyone else in this room can.
The point on this, I have to say, is we hear this from him every 3 months. What he's doing is saying, the question was about, oh, you missed on fixed income trading. And he's like, yeah, but analyst estimates are one thing, we care about the long term. Often we criticize him for that because analyst estimates are going to remain. To his credit, this time, during that earnings call, we really saw JP Morgan stock turn around because people took away from that. Okay, there's been some misses on the top line, but if it is not only one quarter, it's 1 month, it was December, then that's encouraging.